I have a high risk investment portfolio in my Trading 212 account. I started that at the beginning of the year, so it's probably about time we had a look at it to see how it's doing. Welcome back to the channel, guys. If you're new to the channel, consider popping down there and subscribing so you get all future content coming out, everything I create, everything stock market related, penny stock, dividend stocks, value, growth, a whole lot. And while you're down there, give it a little like if you like the content. Wait until the end, see if you like the content at that point, and then give it a little like if of course you do enjoy the video. Feel free to pop a comment down there as well, discuss any matters in the video, what you're in, what you don't think I should be in, how you think my portfolio is doing, or how your portfolio is doing. I'm not going to waste any time with this one. We're going to get straight into the computer and have a look in there. So here we are, starting right off in the portfolio. Obviously different portfolio to the one we normally start out in. This is my high risk speculative play, try and beat the market by a fair margin portfolio. I'll run you through at the end how much I am actually up, because this 11% you can see there is not accurate because I've bought and sold in this portfolio, so I've made profit as well. I'll show you exactly what I've deposited into the portfolio and then what we're sitting at the moment, and then I've already worked out the percentage return on my investment so far. I've had this since the end of December, beginning of January, so sort of beginning of the year. So we're getting on to 6 weeks I've had this portfolio, and I'm quite pleased with the results so far. So I'm going to run you through all the holdings we've got here. First one, as you can obviously see, Airbnb. I've got some that are penny stock, high spec. They may rock it, they may not do. They may return me 30, 40, 50% or more, they might not. Some of them are longer plays, year-long plays that I'm confident will do very well and will beat the market. So far I've got 2,777 in the portfolio, of which 287 is the return on invested 2,490. That 2,490 is what I've invested from selling out, taking profit and reinvesting it. So it's not actually what I've deposited into the brokerage firm. That's what I've then had since selling out of stocks, taking profit and then reinvesting it again. So don't take that into account, that figure there, 2,490. Let's take the overall figure and then we'll work the rest out at the end. So let's go through the listings here. We've got Airbnb, that IPO'd. I was pretty confident that that was going to have a pretty amazing year. We can see over on the right here, the thin dotted line is where I got in, and these are all over a month period. So I got in around here or here, I can't remember where, and it just absolutely plummeted and it's since come back up. I always believed we're always going to have these little lulls like here and here. Believed in that for the long run. That would be a year-long hold, and we're already 8% up, which is great. Biolase is a laser tech company concentrating on the dentistry industry, teeth whitening, and lots of dental technology in order to aid the dental industry as a whole and make it a bit easier. So, but mainly laser tech. We are 3.32% up in Biolase, 28 holdings, and you can see there, as I said, I think I got in around here, or maybe here it dipped and then it's gone back up. We've had highs of around $1.45, so that is a penny stock. Bionano started as a penny stock. I started at $2 and my average price was $2.50. My average price now is $8 because I bought more at around $10 because I truly think that's going to be $15 to $20 quite happily in no time at all. But you can see where my average price is set there, and we're at 11. I haven't got a great deal in this one. This one was certainly one I would have plowed far more money into if I had the funds there, but the account was early in its infancy. I didn't have the funds there available, but I've added to it since. So we're 40% up in Bionano. Everyone knows what Bionano is. Biopharmaceutical company. Their technology in the sapphire is their main catalyst. Next holding here, Black Diamond Therapeutics. These guys, therapeutics, they specialize in oncology medicines. We are down in Black Diamond. This was a relatively recent purchase of mine. In fact, the dotted line might have been around here because we're on a month again. I think it was around here and it went up and it's just creeping back down again. We are down at the moment. Churchill Capital, covered this a couple of times. This is a SPAC that hopefully will be merging with Lucid Motors, of which I think is a great looking EV firm, Lucid Motors. I've averaged up on Churchill Capital. My average price is $19.31. I think I originally got into Churchill Capital at around 15, I think $15. So we're 63% up at the moment. Big things are coming. Merger hasn't been announced yet. These guys will rock it, I'm sure. Cooper Software, we are up 5.8% in Cooper Software. Let's get the chart. I bought this early on around here, I think, just on its way down to lows of 296. and we're up to 364, but I bought in at around 339. They are a technology software company specializing in BSM, business spend management. Hopefully going to do some great things this year. Fortinet is a network security company specializing in cyber security. Got into these guys quite recently. Average price of $157. We're at 161, which means we're 1.82 up. That's going to be a long play for me, along with Cooper Software. These are going to be long plays, much like my Airbnb. Gores Holdings is a SPAC, and they are proposing to take Matterport, the company that makes the Matterport, public. Now, interestingly, Matterport I use in my day job, so I don't personally use it, but we've got people that do use it for us in order to be able to show a property in 3D, not in civil engineering or anything like that, just boring old estate agency, but in the bigger listings, £1 million plus, we use Matterport, and certainly the nicer listings, to be able to show the property in greater detail. Certainly at the moment where people are needing to stay home during lockdown, although the property industry, or the property market should I say, is open for business, but we use the Matterport to aid in people being able to see inside a property without being there, and shortlist properties, I guess, or dismiss them if they know it's not going to be right because of the layout. Matterport helps us do that. So it's something that we actually use and is becoming more and more common in estate agency in the UK. So this back, Gores Holdings, is going to be hopefully taking the company that makes the Matterport public. So it's currently 10% down. So we'll sit that one out, and I just had a little look actually of Gores Holdings, and the dotted line is where I got in, but it doesn't actually look like the company's got up to those sort of levels. I had a buy order on it, which executed as soon as the markets opened in some sort of volatility, I'm sure. You know, look, this is another reason why I just don't think Trading 212 is a very good platform. I just don't think it's as good or at all with it compared to the bigger, more professional platforms, IG, for example. So I've somehow got a position in the company up here when it's never been as high as that. So just stupid, it's absurd. But anyway, is what it is. Don't worry about it. Don't get caught up on things that you can't control. Holicity is also another SPAC, a special purchase acquisition company, and they're going to be taking, they're proposing to take Astra, which is a space company sending satellites up into orbit, and they're proposing to take them public, I believe. So another SPAC that, again, this is all very speculative, so this could never come about, could never happen. They could never go up to the prices that I bought in at, which was $20, just over. We're at $18.50. It could never reach that again, but it's speculative. So as and when they do announce the merger, there should be a big hike in price, and that's where we take full advantage, sell out and realize our profits. Jaguar Health is another pharmaceutical company. Jaguar Health have got the only FDA approved medicine for treating diarrhea in adults with HIV, I think. And I'm sure I did a video on this. Anyway, you can tell me, go and find it. But we're going and looking at doing great things in that biopharmaceutical sector, and they are up 25.62% as of today. Mustang Bio is a real spec play, penny stock spec play. We're up 5% in Bio Nano. Chucked loads of money into this one. Well, not loads, 300. They are a clinical stage biopharmaceutical company. Now, the reason it's speculative at the clinical stage is because we don't know if any of their treatments, medicines, are actually going to be any good. It's at clinical stage at the moment. None of them have been approved, none of them have been verified or had the FDA approval, anything like that. So when you get an announcement to say that they have been approved, we should see, again, huge moves. This is speculative stuff. Nokia was a ridiculous purchase. It was on its way up. I bought it on its way back down here. It was literally because of the hype surrounding the short squeeze for GameStop. Nokia was one of the names that came about as the next short squeeze, as did BlackBerry, as did AMC. There was a short squeeze. Tried to buy AMC Entertainment, and my order got gapped. So, and then the app pretty much shut down because of trading activity, because of the Redditors. So Nokia was a speculative play to see if it went back up again, and there was a short squeeze on it. Nokia may well in the future do some good things. You know, they're still around. Their share price is incredibly low compared to where it has been in the past. So we'll sit on those, hold the shares, and see if they go back up to where I want them to be. That graph actually just indicates how I feel with Nokia and when I bought it. It's just one big middle finger, isn't it? Palatine Technologies. Palatine Technologies, we are 5%, oh no we're not, we are 25% up in Palatine. They're another biopharmaceutical company. Loving the biopharmas at the moment because it's a real growth area. PayPal is one of my longer term holds. I'm going to hold this for the year. We're 20% up in PayPal. I think with everything going on and less human contact, cash payments and things, I think PayPal will have big things coming, and I imagine we will see their share price grow throughout the year. Already 20% up in PayPal, so quite happy with that. Protonix Biotherapeutics, another biopharma company. I'm going to go into each biopharma company individual to let you know what they're doing differently. There's different treatments for each one. They concentrate on different aspects and areas of health, but another biopharmaceutical company, we're down in that. That was a very recent buy of mine. In fact, so recent we're pretty much breaking even on it. I think it might have actioned today actually. Tesla, Tesla, not a very well known stock, is a electric vehicle manufacturer and concentrating on electric vehicles and autonomous driving. They're also in the renewable energy sector, doing a lot of work with solar energy, solar panels, and creating kind of eco houses and energy storage as well. So quite an interesting company to look into if you've not looked into Tesla or don't know who they are. As I said, flying a bit under the radar. Tesla, very unknown. Share price is only at 837. Got a bit of wacko at the helm in Elon Musk. He's an absolute nut job, but hey, they're 17.5% in this portfolio for me, and it's going to be another long-term play. Uranium Energy, uranium mining company. Uranium mining companies got a bit of hype recently. Going to be probably at least a mid to long-term hold for this one, maybe kind of 6 months. It's up 24% at the moment. Zoomedica, so we're 5.56% up in Zoomedica. That literally I bought today on market open. They are a medical, biopharmaceutical, diagnostics and treatment company for veterinary services. Quite like the idea of Zoomedica. Love animals, especially dogs, growing up with dogs. So, and a bit of hype over them. They're doing great things, so I thought I'd get into that, but I actually quite like the idea of Zoomedica as well. So probably a longer term hold for me, certainly 6 months, unless we see crazy rocketing prices like we have, and then I might just take profit. Zoom, I got into Zoom near enough 11 months ago or so, probably 10 months ago, and rode the Zoom wave throughout the whole of last year during the lockdown, and I earned 337% on it. I didn't have a lot in it at all, monetary wise, very small amounts, because I was being very cautious with my money back then. In fact, probably not a dissimilar amount, maybe £200-300, but that'll be a long-term hold throughout this year. More and more people are working from home now, companies are learning how to do it, and we're still being very careful and cautious, so I think we've still got great things to come from Zoom, so we'll hold those. And the last one, another pharmaceutical company, Zynerba, that's definitely not how you pronounce it, but hey ho, they absolutely shot up yesterday. I think it was yesterday, and we saw highs of $8.76, nearly $9. I'm still up 28% in them, and we'll just hold those for another big run like that, and then maybe take some profit. In fact, I'm pretty sure I took a little bit off the table yesterday anyway. So that's what I've got being held at the moment. The ones that I've bought and sold out on, I've got a quick list here. Skills, which is a gaming company. Microvision, which is a laser beam scanning company, LiDAR and other applications for laser beam scanning and things like that. Plug Power, EV charging company. Atosa Therapeutics, biopharmaceutical company. I did a video on that. Eterna Zentaris, I'm thinking that's actually pronounced Eterna Zentaris or something, I don't know. Anyway, another biopharmaceutical company, bought and sold out of. PACB, which is Pacific Biosciences, that is ARK Invests, one of their ETFs, their genomics ETF, I think, one of their biggest holdings, so it kind of made sense to buy into that. If Kathy Wood believed in them, I did as well, and I have since sold out of those because they rocketed. And again, I'm just in a lot of these little things as for short-term plays. If I see some profit, I'm going to realize it before it's too late. One other thing I want to mention, actually, I've got one in this portfolio, which is Bioline RX. Did a video on this one as well, and we are currently 33% up in Bioline RX. The reason it's in this portfolio is I can't buy in the ISA, and right now I'm in my other portfolio, which is non-ISA Trading 212 portfolio, which my fiance and I actually share. And I bought Healthier Choices Management in this portfolio because I couldn't buy it in the ISA, but I could buy in this one. and I had the funds there. Well, actually I put money into it. So I bought £100 worth and then £8 worth when it dropped a little bit, and I sold out at 177, so made a small profit there. Sold out at 0.0031. Should have waited because it's now at 0.0052. But I realized some profit. I'm not going to dwell on what could have been. I'm going to look at the positives. I made some good profit for a very quick move. I made a good 50-60% pretty much straight away, or more than that, just a little bit more than that, 68% I think it was, something like that. So I made a real quick win, which is amazing. But that's it. This is in the other portfolio, my other account, rather than my TETrading 2121, which I couldn't buy that one in, and a lot of penny stocks I've been looking at you can't buy in the Trading 212 account. So there's a brief overview of the portfolio. So I'm going to quickly work out the total gain for this account and how far up I am in percentile terms. So the account value is currently at 2789. So I'm doing this just a little bit later on. And my deposits into it were 2,150. We've got the bought and sold realized profits here, and we've got the profits that are currently sitting on the table. You can just see them there, 297. So we're simply going to do 2,789 divided by the deposit that I put in initially, brings it out as 1.29. So that effectively, if you turn that into a percentage times 100, we've got 129%. So what's sitting on the table at the moment is 129%, or the account value is 129.7% of my initial deposit, which means I have made 29.7%. So we've made nearly 30% on the account value. Another way of calculating, I guess, and just to show you, would be if you take 2,789, you take the initial deposit, and that's the only thing I've put in as my contribution, brings me to 639. So 639 is my profit, and out of my contribution, if we then times that by 29.7%, it brings us at 638. So we weren't using the decimal points and it wasn't exact, but it's there or thereabouts. So let's just be bullish. Let's pretend that we're about to have a nice green day tomorrow to finish the week with 30% up in this portfolio. This is a high risk, high spec play. There's a few SPACs in there that are yet to announce mergers that I think will do very well. Some may fall off a cliff, who knows. I've got my Airbnb, my PayPals, my Zoom and my Teslas that I think are going to do very long term throughout the year. But so far in the first 6 weeks, we're 30% up in this portfolio by taking profit off the table when I feel I should and reinvesting the capital back in. But essentially my contributions to this portfolio is 2,150 and we're currently sitting at 2,788. So done extremely well for the first 6 weeks as far as I'm concerned. I'm very pleased with it. Bear in mind 30% of the portfolio is currently sitting as profit. It'll be very interesting to see in the first 3-4 months, 5 or 6 even, if we can make a good 50% profit on this portfolio. That would be pretty amazing. I'm going to keep adding to this portfolio on a weekly basis, a monthly basis as well. So it'll be interesting to see where this goes over the course of the year. So that's it guys, the whole portfolio, the growth portfolio, what I'm in at the moment, how well the portfolio is doing and what I've been in and out of to produce that income. As I said in there, I'm doing quite short-term plays, realizing 20, 30, 40, 50% growth in a stock and then cutting it short, getting out and taking the profits. There's nothing wrong with taking profits. A couple of them I look back on and think, oh, if only I stayed in it for longer, I could have been 60, 70% up instead of 40, 50. Can't look like that. You've got to enjoy the profits and take the profits when you can and not look at the stock afterwards really. So that's the portfolio, high risk in Trading 212. Until next time guys, I'll catch you guys in the next video. See you later.